We're back with E2MC's Raphael Roettgen, great venture capital company. Go check out the E2MC website. And also I will have the description of what we're about to talk about, or the link to the data of what we're talking about in the description. Thanks for doing this. We're going to talk about February's funding rounds. We're a little late this month because you've been super busy. What have you been up to?
Yeah, we're basically trying to populate some of these funding round tables for the coming months. So you will find out as we go along, and in the future months when we go through these, I think more and more, then we also have E2MC pop up as an investor. But yes, apologies for that. We'll try to be sort of back to our normal time frame in from April onwards. But it's been an interesting month, hasn't it?
Yeah. I mean, it starts off February with a ton of money going into SpaceX again, and then, much to my surprise, Black Sky being involved in a SPAC.
Yeah, another space company SPAC merger. I mean, obviously, SPACs are a big thing in general. I mean, we had some internal analyses actually late last year, and just in the US, which is sort of the epicenter of the SPAC market, we found over 300 listed SPACs. Now, we could easily do an entire episode just on SPACs. I think they certainly, I mean, they have been around for a while. They're just sort of going through a renaissance. I certainly see the reasons why, being an ex-investment bankers, I do think they have their place and their value add. Now, we've seen quite a few SPACs in things like electric vehicles and fintech and so forth. But yes, it's also touched now the space sector. I mean, actually, if you remember, Iridium a while ago went public via a SPAC. A lot of people don't remember that. But so the more recent one, obviously, or the most recent trend started in mid-2019 with the announcement of Virgin Galactic merging with Social Capital as a SPAC merger. And then, that transaction closed later in 2019. And then suddenly in sort of autumn 2020 onwards, we got half a dozen of those, right? Starting with, I think, October, November with Momentous, and then shortly thereafter AST and Science. And now we have Black Sky and Astra in February. And of course, when we talk about March next month, we already know that we had Spire and Rocket Lab, and I'm sure those won't be the last transactions. Again, there's a certain logic to these transactions, I think, although I will not comment on anyone in particular on valuations or things like that. But it's an interesting trend, I think, for people like us who care a lot about the space economy and want to see the space economy grow. This is actually, well, if I want to take the optimistic note, this is quite positive in that it really accelerates capital inflows into the space economy. I mean, look at the numbers here, and Black Sky and Astra Space, they're both close to $500 million. And so I pointed out in the text that's making certain assumptions, namely that basically they get all of the cash in the trust, and then they all get all of the announced what's called PIPE investments. And again, we could kind of talk much longer about that. But in any event, if you take these numbers as roughly right, it's like almost $1 billion just for these two companies. And I think it's fair to say if those companies would have had to raise the money in the private markets, the traditional way, like via another Series C, another Series D, that would have been more painful. It would have taken more time. So I think the main effect of the SPAC trend here with regards to the space industry and with regards to other industries is it just materially accelerates capital inflows, and it allows companies to accelerate executing on their business plans. And of course, you see these are big numbers. It's quite common for a SPAC company to have something like $200-300 million of cash in trust, right? And so one of the first criteria for a SPAC merger is that the target needs to have a legitimate use for that much cash, right? I mean, you're not just going to take the cash for the sake of it, but you really need to justify why it can help execute your business plan. And of course, what we have in space is that you and I know, and most people following us know, that many business models in space are quite capital intensive, especially every time you put up hardware, like satellite constellations or rockets and so forth. So, quite a lot of space companies have the justification to use a lot of cash to accelerate their business plans. And that's why I also think this is going to continue.
Okay, so your belief is that SPACs are not the flavor of the month, but actually something that's going to stick around.
Yeah, look, every time something like this happens, then probably somewhere it may get overdone, and then it might come back a little bit again. But I don't think this is a gimmick. This is just kind of like we had like a short-term renaissance of SPACs, and it's going to go again. There's sort of like legitimate reasons why SPACs make sense, and yeah, so I think this will continue for a while.
Okay. And yeah, and I do see the value in having large amounts of cash held in trust available for actually executing.
Yeah.
That's
What
very
what I will say is that what you're seeing now a little bit more is that, so there's a number of SPACs out there which I would say are relatively generic in terms of, what kind of target they actually want to merge with. We are now starting to see some more, well, they've always been there, but I think we're now seeing increasing numbers of industry-specific SPACs where really you have teams in the SPACs that really, for legitimate reasons, understand a certain target industry really well, and so they can offer more than just capital. And I think that just makes the whole SPAC thing qualitatively much better.
okay. Well, let's scroll down the list a little beyond the SPACs into
So
some
we
of
get
the smaller
mesmerized by these large
investments.
numbers, but
Yeah, yeah.
even the and of course we had SpaceX on top. But I mean, even number 4 here, Axiom, my $130 million round, and they didn't comment specifically or explicitly on valuation. They just said they are solidly in unicorn territory. And I mean, speaking of capital intensive space models, as we just did a minute ago, I mean, there's a capital intensive space model, right? You're putting up a private space station. So this certainly won't be the last financing round, and it's good to see that investors continue to trust the Axiom on executing the business plan, and we're all very excited to see them do that. I mean, we're all very excited to see the Axiom private space station.
Right. Yeah. And for me, with Starbridge being involved, that's a great indicator that it's likely to succeed. So I like that a lot. All right. Well, who else on the lower end of the list should we be looking at here?
I mean, this is almost like not a nice thing to say, the lower end of the list, right? I mean, come on, like even like the end of the first page here. So 61 million, 40 million. Isotropic, I think, is a very interesting company in satellite communications. Just has a very, very interesting technology, very innovative technology that allows them basically to to be in connection with various satellites, multi-band in various orbits at the same time, solved in a very intriguing way. I mean, we would go way too much into the tech to discuss it here, but whoever's interested in satellite communications and maybe hasn't looked at it yet, I think that's a company worth looking at. Speaking of sort of SATCOM in the broader sense, I guess it's really more orbit services. The one after that in the list, Lightloop, which hadn't been that much on my radar screen before, I must admit, but this is quite compelling as well. So potentially, this is basically a business model of data storage in space, the way I understand it. And they propose to put up a constellation of satellites. And the way the data actually gets stored is basically that you move the data continuously around via inter-satellite laser links. It's a sort of whole new way of basically securing your data. And obviously, again, capital intensive, right? Because you need to put up a constellation, and then the constellation needs to have the inter-satellite links as well. But I think this is quite interesting. I'm very curious to see how that progresses, and who the customers are going to be, and so forth.
Right. Because like I was business development manager for a full service IT firm for a while, many years ago, and we had out of region offsite data storage, right, to get away from hurricane zones or earthquake zones or something like this. This one's in orbit.
This is really out of region.
none of that's going to be happening. But on the other hand, like satellites are kind of fragile, right? Like. So
yeah, I mean, you'd figure they probably have some sort of plans for redundancy in this.
Yeah.
I imagine.
Right, and then the possibility of data corruption or data loss if it's continuously being beamed around. But clearly they've solved that issue. So I'm glad you said that because I'm going to check that company out a little more. Well, excellent.
There's actually there's so interestingly enough, I mean, just because this may sound so exotic to some listeners, there is actually at least one other company I'm aware of who's doing that, which is Cloud Constellation.
Okay. Well,
so it's always a good sign, if there's more than one company
right.
who has thought of a business model, as you know.
Right. I mean, the proof's going to be in the pudding, right? Do they get customers signed up for this service? And I wonder, like you say, who it's going to appeal to the most and what the costs are going to be like. I think there's going to be a capacity limit, and then how many customers can they actually serve, and how much data can flow through that system. So I'm going to enjoy checking that out. Well, have we missed anything?
Well, I think there's a few others, obviously, which the listeners can sort of look at their leisure. Again, it's been sort of a relatively nice cross-section geographically between Europe, the US, and Asia. I mean, in terms of amounts, it's just obviously this month is completely biased towards the US just because you had SpaceX in there, and the two SPACs are in the US as well.
Lop those off. Yeah, and we've got Singapore and China and Germany, India. It is a nice mix. Well, I appreciate you doing this, Raphael. Folks can go to the links in the description to find out more information about this particular listing for the month, or your website and firm. And we'll catch up next month.
Will do. Thanks, Jason.